So Bitcoin is dumping again, and all over the timeline is doom. But before you think about calling a top, please just take a look at this chart. It's so important because since 2023, every single time Bitcoin comes back down towards this trend line, it has not started a bear market. In fact, it's done the opposite and marked a next leg higher. If we analyze all prior corrections going back to 2023, we had a 22% correction before a major bounce. In 2024, we had a 34% correction back down to this trend line before bouncing to a new all-time high. In Q1 of 2025, we had a 32% correction back down towards the trend line before another major bounce and new all-time high placement. Now, fast forward to Q4 2025, we've seen a 36% correction, bringing Bitcoin back down to the exact same trend line. So history isn't saying this is a bear market. What history is saying is this is a potential liquidity sweep before continuation. Now, before we get into the charts further, you need to see what's happening off-chain, because whilst retail is panicking, the big money is doing something completely different. Whales are in fact accumulating faster than any time since 2012, buying 54,000 Bitcoin worth $4.6 billion in the past week alone. And this is the fastest accumulation pace since 2012. So over a decade. And this is, where bull markets die is when whales sell, not when they load up aggressively. Which brings us over to Securitize, because they have a very interesting announcement. They have just brought stocks on chain. Real stocks, real ownership, trading on chain for the first time ever. This is actual ownership, fully tokenized and 24/7 trading. It's the future of markets, really and truly. And Bitcoin is the base layer this entire system will settle on. Absolutely massive. Now, coming on to our final piece of macro news, we're looking at Coinbase Institutional, because they're buying at record levels. Just look at this massive spike. Institutional flows on Coinbase are the strongest they've ever been. And this signals that smart money isn't scared. It's in fact positioning itself. So we'll actually come back to this later, because the macro signals matter for the high time frame trend that we're about to break down, which, brings us onto our weekly trend structure. We'll first go back to this chart, because heavy corrections, I want to emphasize, are normal. It's normal. 22%, 34%, 32%, and 36%. Every single time Bitcoin returns to this trend line, it marks the next leg higher. And this is where the macro comes in, because with whales buying 54,000 Bitcoin in a week and Coinbase Institutional buying at record levels, this isn't bearish behavior. It's exactly what you want to see before the next leg up. There's some confluence here. Now, coming over to our weekly levels, this could initially mark the sweep before the bullish reversal. At this moment in time, Bitcoin is dropping from its imminent supply at about 94 to 95K and pushing back down into the demand zone. This move could simply be a liquidity sweep where price dips below local lows and initially taps into the demand block, which is from the lows back in April, when we actually had a 32% correction. So if any lower price action is to occur and we actually sweep into this liquidity pocket, we do have support in the 80K territory, where we could potentially come in and fill in the wick from mid to late November. Leverage gets resets, the whales accumulate, which they, again, literally are right this second, and it lines up perfectly with an increasing, institutional buying. We do have a second demand block below, which sits on the lows from back in November of 2024. If Bitcoin can't hold the demand zone in the sort of 80K territory, which is what the bulls need to do to see a reaction back into supply, then we do have a second major liquidity pocket below in the 70K area. So with the weekly analysis, let's now head over to our daily time frame. We're zooming in a little bit more here, and there's a clear structural breakdown of a rising wedge pattern or a rising channel, because what we had was a clear level of resistance and support. And this was going on for a few weeks, initially until the 9th of December, where Bitcoin tapped out at resistance. We then came back down, and on the day of 14th of December, we lost the support of the rising channel. Now, we did find a low, but since then we ran into immediate supply and back on the previous level of support and have met it as resistance. So at this moment in time, Bitcoin is looking to tap into liquidity pockets. It's following technical structure perfectly. We have two clear support zones, and the first one sits at 83K. And if that gets swept, we have a lower level of support back down at $80,000. This typically happens near cycle resets. We have shark wallets, i.e. wallets with 100 to 1,000 BTC, heavily accumulating, and is what we showed you in the second macro chart here. And whilst that's going on, Bitcoin is coming back down to a major critical level of support, which brings us over to our 4-hour time frame, a little bit more intricate, a little bit more zoomed in. And we did have this previous level of ascending support for Bitcoin, which it initially lost and confirmed as resistance. Momentum is trending downwards from imminent supply in the sort of 90K area where we've seen resistance. And at this moment in time, there are two key support areas to maintain. And that, you could say that really and truly we're drifting towards the first target, which on the 4-hour time frame does sit roughly at about 83K. But losing that, what we could see is a drop back down to the second demand zone at $80,000. This is nothing unusual. It's just technical movement inside a larger bullish cycle, a cycle where institutions are buying more than ever. So coming over to our last 2-hour chart, BTC is still sitting in the crucial demand and support territory. This is the level to watch because, sitting in this inside this demand zone is the same level that has held on multiple occasions in the past month. This is a very interesting level of support where previously we have seen some relief rallies. So the bullish scenario is hold the green zone, reclaim 89 to 90K, and attack the $90,000 supply. This is the bullish scenario, pushing back up to these two resistance levels above between $90 to $92,000. The bearish scenario, if we lose the green zone and we initially get a deeper liquidity sweep, we could push back into 84K, which is the lows from December of 2025. And below that, again, we have the liquidity sweep pocket sitting at $80,000 from the lows in mid-November. Liquidity awaits below. This isn't definitive reaction time. This is simple structure and is a key reason which makes this support zone even more significant. So to put this all together, Bitcoin is tapping the exact same trend line that it has done over the last couple of years. On-chain data shows that shark wallets and whales are aggressively accumulating 54,000 Bitcoin in the past week. Coinbase institutions are buying at record levels with a drastic spike in the chart, and real-world finance is moving on-chain, which supports a more bullish narrative. The correction fits perfectly into the bull market structure that we've seen for years, and this is nothing out of the ordinary. We've got short-term volatility that could potentially signal long-term strength. Now, if you want to support the channel, the links below are there for you. Trade on the platform we use every day, get fee discounts and bonuses. It's completely optional, but it really helps the channel grow. So thank you for being here, and I'll see you in the next video.